One of the key events market watchers are eagerly anticipating is the Reserve Bank of India's monetary policy decision in August. Many expect that India's central bank may soon start cutting rates to further boost the economy as inflation continues to decline month by month. However, RBI Governor Shaktikanta has poured cold water on these hopes. He recently stated that interest rates are likely to stay higher for longer. His comments suggest that the RBI is committed to reducing retail inflation to its target of 4%, and any talks of a rate cut before achieving this would be premature. Retail inflation in India has been easing for the past 5 months. However, with vegetable prices once again on the rise, June CPI print may see a slight uptick to 5%. Prices of tomatoes, onions, potatoes, staple in every Indian kitchen, surged by double digits last month as extreme heat and heavy flood in India's northern states disrupted agricultural production. And with expectations that food prices will continue to remain a pain point, the RBI may be in no hurry to kickstart monetary easing. Apart from inflation, the RBI is concerned about the adverse impact of monetary easing on deposits. The central bank has expressed worries over bank advances outpacing deposit growth, which remains sluggish. Business updates reported by Indian banks in the first quarter indicate that deposit growth has not picked up much. Cutting interest rates now would further slow down deposit growth. This is because when the RBI lowers rates, banks typically reduce the interest they pay on savings and fixed deposits. As a result, people might find these deposits less attractive and choose other investments with higher returns. This can lead to slower growth in the amount of money people deposit in banks. In the June monetary policy meeting, the rate setting panel kept the repo rate unchanged at 6.5% for the 8th consecutive time. However, this decision was not unanimous. 2 of the 6 members of the MPC, the Monetary Policy Committee, Ashima Goyal and Jayant Verma, voted for reducing the repo rate by 25 basis points and changing the stance from withdrawal of accommodation to neutral. In fact, Verma has been in favor of a rate cut since February meeting, becoming the first MPC member to do so since May of 2020. In June, Goyal joined Verma in voting for a rate cut. Both have argued that keeping interest rates higher for longer would hurt growth and impede India from reaching its full potential. Regardless of this dissent, recent statements from the RBI governor suggest that status quo is likely in August policy meeting. Experts believe that rate cuts in India may only start in December or once the US Federal Reserve kickstarts its monetary easing. This will help maintain the spread between India and US rates and keep Indian debt more attractive to foreign investors vis-a-vis the US. However, if the RBI does not cut rates this year, it would be the longest pause since the MPC started setting rates back in 2016.